Okay, so it is July. It's September 10th, 2010, and on the livebusinesschat.com, we've been having a discussion about a trade that I put on that was really successful. Made 110%, and you can click on the links in the sidebar to follow that discussion. And I just wanted to go over the charting reasons why I did the things that I did. So, as you can see here, this is the same chart that we've been looking at for the past little while. This is the NASDAQ 100. I made a video around here where it was in an uptrend and then started to turn around and go back down. Let's go ahead and zoom in and see what's happened since then. So, it was in a downward sloping channel, and it's going to bounce between the upper and the lower portions of that. So it went up, turned around, and I said, well, I expect it to go down again, and it did for a little bit, but then it turned right back around. That's kind of hint number one that your predictions are not quite in tune with the new information that the market is using. So we had a really strong update right here, and things continued to go up, made a new high, and then bounced around for a little bit, began a small descending channel, and then broke out of that. So right here, there was this downward channel that everything had been inside, and it broke out of that, it bounced off of that and came back down. It only came back down halfway though, so here is the upper line for that, and here is the bottom line. And as you can see, it came down about halfway from here to here. And then it turned around again with a strong upward move and went up. So at this point, on this day, it was the 1st, I looked at it and said, well, things look bullish, which is surprising to me because at the moment I'm very bearish on the whole thing. But you cannot put your own opinion into the marketplace. You can only act on what the marketplace shows you. So even though I think long term things are headed down, I went ahead and bought a call, and now that's a strictly bullish position to put in. And basically, if you buy a call, then you will be rewarded if the stock or issue or index that you're dealing with goes up. And as you can see, things went up. Let's go ahead and zoom in there just so you can see a bit better. So, open a call here, and this is the NASDAQ 100, and it continued to go up. At this level, it was about 1820 or so, and I bought an 1850 call. So I closed it out today at 1892, or I think it was 1875 or about 1880 when I actually closed it this morning. So it had gone from 1820 to 1880. That's a 60-point move. And my call was in the middle of that. So it went up from $19 up to, it hit a high of about 50, but I sold it at about 44, I think. So that was a very good trade. The reason I closed it out is because as you can see, things are starting to arc a bit, which shows us that the current move is running out of steam. It might pick up a new leg and go up, or it might roll over and go down. I'm at this point, it's kind of in an indeterminate stage. If anything, I would probably bet on a small leg downward. But either way, it's running out of steam. The option was running out of time. It expires at the end of next week. So I decided I'll just take my profits and be happy with my 110% return. So that's what I did. And you can view all the transactions on Live Business Chat. And I posted all the numbers as I was doing them. So you can go back and see, well, I opened it on this date, and then on following date I did this. And I hope that's helpful. Another method to look at these kinds of trends is with, basically moving average indicators. So I've got another charting package that I use. I use two. Let's zoom out here. On the left and the right, we have the NDX again, but represented different ways. The right here was that November, or is that September 1st, when I was saying, things turned around, and you can see all of these indicators right here and down here and down here. All of them went from a low and started to move up. And they all did it together, which is a very strong signal that things were going to be upward. And sure enough, they were. Now, most of them are pretty high. Most of these indicators here are at the high side, which means, they could flatten out and do nothing for a little while and then go high some more, or it could turn around. At this point, it's not exactly clear yet. Probably by next week, it will become clear. But that's how we do it. You got to ride the trends. There's that old expression, the trend is your friend. It's absolutely true. The big moves are made in the big money. These are all, trading, aphorisms, but they're all used for a reason. They are all accurate. So, if you're going from here down to here, you want to be short on the market. If you're going from here up to here, you want to be long. If you're looking at a longer trend, this is a daily, let's zoom out and look at a weekly. Let's say you're a very long-term trader, then, you want it to be long from here up to here. And then here, you could still be long, actually, and probably be okay, as long as you got in down here. So, yeah, identify what's going on in the market and then react accordingly. Don't do something and then try to fit it to the market. That's really the main message I wanted to get across. And that's it for now. We'll see you next time. Be sure to check out livebusinesschat.com.